Welcome back. Here with us on Bazaar Morning Call, and markets across Asia, like I've been saying, are more green than up, which is why the implied open is suggesting that, finally we could actually start off almost 18 to 19 points on the positive side of the screen. So now, what about individual stock? We've discussed the big global headlines. Let's boil this down to the individual names that you need to keep an eye out on, and our research team is standing by with the CNBC TV 18 list of top stocks to watch. Guys, morning to all of you. Mangalam, let's start with Zomato. What drama, high drama towards the end of trade yesterday. So what came through on the call and the notes you've seen?
Well, from the call and the notes that we've seen, it's more of the same. What we saw in the shareholders' letter, the company went ahead and reiterated that in the call itself. They are advancing investments in the quick commerce business, and as a result of which, in the very near future, losses in Blinkit will continue. In fact, they say losses in quick commerce are largely on account of pulling forward these growth investments, and heightened quick commerce competition has led to a temporary pause in margin expansion. They said it in no uncertain terms. There is losses which are likely to continue, and there is a temporary pause in margin expansion out there as well. Food delivery revenue growth was slowing down because of weak consumer sentiment, and the EBITDA margins out there can cross and sustain above 5% over the next few quarters. District has crossed about 6.5 million downloads. Going out business, GOV can grow at over 40% for the next couple of years. But the street is still focusing on Blinkit itself. If you look at the trend, Blinkit, same time last quarter, had done a loss of almost 89 odd crores. And because of the increased investments, losses are at around 103 crores. So the street has cut their EBITDA estimates for this year, though they've increased their revenue estimates for next year because the growth has been, increased because of the front loading of investments. A lot of target price cuts that have come by.
Okay, all right. Mangalam going with red on Zomato, so we'll keep an eye out on that stock. But let's hop across to Abhishek. He's here to tell us about L&T Finance. Morning, Abhishek.
Morning, Nigel. It looks like a weak set of numbers coming in for L&T Finance. Net interest margin is at 6-quarter low of 8.5% versus 8.9% in the previous quarter. Asset quality continues to see deterioration, so gross NP ratio is at 4-quarter high. The AM growth is very low, just 2.3% sequentially, which is one of the lowest growth that you are seeing in the last 5 quarters. And this is on account of the fact that disbursements have slowed down massively. Disbursal growth is just 2.3% YOY, which is one of the weakest growth that you are seeing in the last 7 quarters. And sequentially, disbursals have grown by just 0.3%. Disbursal to AM ratio is also weak, that I've calculated close to 14% versus 28% in the previous quarter, suggesting that the tenure of the book has declined massively. Back to you.
All right, Abhishek, thank you very much for that. That's L&T Finance. Keep an eye out on the stock. We have the management, by the way, joining us at 9:40 this morning to take us through some of those numbers. MCX is the next one we want to address. Vamakshi is here with details. Vamakshi, morning.
Well, good morning, Prashant. The company reported a rather muted set of numbers. When you look at the growth rate, that has slowed down. In fact, in quarter 2, we saw double-digit sort of growth rate in throughout, across the board. But this time around, the growth rate has slowed down to single digits. We're seeing a 6% quarter-on-quarter jump in the revenue. EBITDA is up 8%. The EBITDA margin too has improved by 125 basis points. But this is much lower as compared to 600 plus basis points improvement that we saw in quarter 2 of FY25. The net profit also saw a single-digit uptick of almost 4%. When we look at the key internals, nothing much impressive out here as well. Traded clients saw an uptick of 1.5% quarter-on-quarter. They now stand at 6.9 lakhs. ADT in futures and options both combined saw an uptick of 6.9%, and this growth is largely being led by the growth in the options bit. The market share has seen only a marginal improvement, so overall not a great set for MCX. A call is scheduled later today, so we'll be watching for commentary that comes through from the management, but going with the red for MCX as of now. Apart from that, lots of sugar counters in focus, and we'll talk about that later.
Yes, absolutely, because now sugar exports have been opened up, and we're going to come back to Vamakshi to figure out how that's helpful for the companies. But first, let's go to Sudarshan Dixon. Sudarshan, not bad, right? Stable for Dixon?
Good morning, Survi. So if you compare with the actual numbers year on year, you will see that all the operating numbers have seen a growth in triple digits, but numbers are largely in line with estimates led by mobile segment, which saw a growth of almost 190%. Now the contribution of mobile segment to total revenue has increased to 89% from 67% in the same quarter last year. And company is set to meet or beat the revenue guidance. If you remember, after Q2 earnings, company had spoken to CNBC TV 18, had said that in FY25, revenue will be close to 40,000 crore, and in 9-month FY25 it has done nearly 29,000 crore. On the margin front, it has a guidance of 3.7 to 3.8%, and in 9-month FY25 it has done 3.7%. Talking specifically about Q3 earnings, profit is up 123%, revenue has increased 117%, EBITDA is up 112%, and margin almost flat. It has come in at 3.7% versus 3.8% in the same quarter last year. Brokerages are large, have a mixed views on the stock considering rich valuations, but if you look at the commentary post earnings, it's very strong, especially on the order book, and that's the reason I'm going with green for Dixon Tech.
Okay, all right, and we'll be chatting with the management at 9:40 a.m. to detail the past quarter's numbers and get their sense about how things are shaping up going ahead. Let's go back to Abhishek. He's here to tell us about SBI Card. Abhishek.
Well, Nigel, you were on leave in December, and the December credit card data shows huge spending, especially you might have done on a lighter note. So industry data shows a huge momentum with respect to spends in the month of December. Now, total cards is up 10.5% YOY and about 0.8% month on month, but spends are up close to 14% YOY and more than 11% month on month. So average spends have increased by 3.2% YOY and about 10.24% month on month. SBI card data shows better momentum on a month-on-month basis. Total cards is up 9.5% YOY and about 1% month-on-month. The total spends are down 3.5% YOY, but they are up 12% month-on-month. So average spend is up about 10.8% month-on-month for them. With respect to their market share, in total cards, their market share has increased to 18.74% versus 18.69% in the previous month. Even the spends market share has increased to 15% from 14.88% that they had earlier. Back to you.
All right, Abhishek, thanks a lot for that. And I can confirm to you that in December, my credit card bill is the highest in entire 2024, but I can't say that it was a SBI card. Thanks a lot, Abhishek, for joining in with that. Now let's hop across to Vinny. She's here to tell us about a couple of real estate companies, Oberoi as well as Sunteck. Vinny, take it away.
So both these companies have reported the Q3 FY25 numbers. Oberoi Realty, a strong performance that's coming from the company. Revenue seeing a growth of around 34%. EBITDA also seeing an improvement of 68% on a year-on-year basis. Margin seeing a sharp improvement, and profitability also is seeing a good improvement of more than 70% growth on a year-on-year basis. Now, what's led to this strong performance? One strong performance was across verticals of the company. So whether you look at the hospitality business, that's seeing a good growth of around 20%. EBITDA for the hospitality business has also seen a growth of around 11%. Improved occupancy across its annuity assets, that is also very good, as well as residential business that's reporting a pre-sales growth of around 144%. So that's going to be interesting to watch out for going forward in terms for the company. Margin also has seen a sharp improvement, beginning because of the higher share of the commercial earnings, as well as healthy margins in the residential business and healthy margins in the hospitality business is aiding the margins of the company. So expecting a green here. Sunteck Realty, similarly, we're expecting green here as well. Revenue seeing a good growth of 281%. Profits, company has seen a profit this time versus a loss last year, and EBITDA coming in with a 48 crore EBITDA and an EBITDA loss of in the last year. Margins also seeing an improvement, and it's coming at 29.9%. What's leading to the improvement this time is in terms of the revenue that was aided by the additional units in Naigaon that was there for the project in BKC as well, which is supporting the growth of the company. And Sunteck Realty is expecting a launch coming in Q4 FY25. Keep an eye out on that. They have good numbers coming in terms of going forward. Only thing to watch out for in terms of Concall is the difference that is there in terms of pre-sales as well as the collection. That's lagging a bit, so we'll watch out for commentary on that front going forward.
Right, Vinny, thank you very much for that. Back to Abhishek. Paytm should be in focus, and J&K Bank also on the back of numbers. Abhishek, over to you.
Well, Paytm held its analyst call yesterday post-market, in which they have given their EBITDA break-even guidance to be in line with the earlier guidance. So the company had guided for EBITDA break-even, that is before ESOP cost, profitability by the end of financial year, and they have reiterated the same. General guidance, the goal of the company is to have double-digit EBITDA margin soon, and they have they also want to have substantial PAT for them. Net profit break-even guidance is about 2 to 3 quarters due to steady fall in ESOP expenses, and they have also given another guidance. The company expects continued steady growth in its merchant loans as well. J&K Bank, disappointing set of numbers. They have lost market share, especially on the advances front. Deposit growth is about 9.65% YOY and 2.2% sequentially. The loan growth is very weak at close to 7% YOY and a decline of 0.15% sequentially. Net interest margin, however, improved both YOY and quarter-on-quarter, but their asset quality has deteriorated. Gross NPA ratio has inched up by 13 basis points on a sequential basis. Back to you.
All right, Abhishek, thank you very much for that. And now let's go back to Vamakshi to figure out why sugar companies could be in focus and maybe they could see a bit of green. Vamakshi.
Well, absolutely, Surbi. They could see a bit of green today, and that is because, it is a CNBC TV 18 Newsbreak confirmed the government has gone ahead and decided to allocate export quota of 10 lakh tons for 2024-2025. Keep in mind that this is lower than what ISMA had earlier demanded, which was somewhere around 20 lakh tons for the exports quota. But overall, the impact is expected to be positive. In fact, a couple of days ago, when this news was sort of floating around in the market, we were joined by Prashant Biyani from Elara Capital, and he had highlighted that this could be beneficial on the balance sheet as the inventory gets cleared up. The working capital could also, it could work out favorable in terms of that as well. But the margins could see only a mild uptick is what he had said. So overall, going with the green for all of these sugar counters.
Okay, all right. Got that, Vamakshi. Thank you very much for the details. Let's quickly recap our list of top stocks to watch. Now, the ones that have positive news flow around them are Dixon Tech, SBI Card, Oberoi Realty, Suntech Realty, Paytm, and sugar companies. The ones that could see some negative reactions today are Zomato, L&T Finance, MCX, and J&K Bank, all of them on the back of earnings. Well, that's the equity list for the morning, but how is the commodity market looking at Trump 2.0? We've got Manisha joining in with the latest. Manisha, I hope you managed to get some sleep because there were so many headlines and orders coming through the night, right? Interesting reaction. The crypto markets are a little, maybe a little disappointed, but maybe they know better times are coming. But yeah, tell us what you made of all of it.
Oh, well, absolutely, sir. It's been a very mixed market, and the street is still trying to number crunch, understand event, and digest whatever was said yesterday. And this is just the beginning. Let's get that. So I'll start with the crude oil prices, which have rebounded from its lows. The U.S. crude prices have continued to see further decline, rather. The U.S. president has now repealed 2023 memo that barred oil drilling in 16 million acres in Arctic. Also, there is uncertainty right now on potential adjustments to the U.S. sanctions on Russia. That is yet to come. But two things are very clear when it comes to energy. One, there's going to be a higher use of fossil fuels. Two, there's going to be more oil available. And three, U.S. does want to play a larger role in exports when it comes to crude oil and natural gas. So these are the things to watch out for. When it comes to metals, it also has been about the dollar index, which fell by nearly a percentage point yesterday. That was supportive. But then Trump has refrained from making concrete changes to trade policy, but has also said that the tariffs could be levied against Mexico, China, Canada on 1st of February. So the details of that, and until that happens, we are going to be looking at very choppy markets continuing. So while we have seen the safe havens like gold and silver gain up, the other metals have been slightly under pressure because when the U.S. president has revoked 2021 order that ensured 50% of all new vehicles as EVs by 2030, that would have meant more metal demand as well. Now, with tariffs, EVs, what is going to be going forward is something that will tell you on where the markets are. So until that happens, we're looking at choppy and slightly decline in copper, aluminum, zinc, steel, iron ore. All of these metals actually trading slightly in the negative in Asia right now.
All right, Manisha, thank you very much for that. So that's commodities in focus. We'll take a quick commercial break here. Sayan Mukherjee of Nomura India will be with us to discuss his outlook on the market. Has it changed in the last 12 hours or so? A little bit, maybe at the margin after Trump 2.0 and what he said. We'll ask him in just a bit.